All right, so a huge week this week. Obviously, the CPI, we'll talk a little bit about that. Also get into the Hinman emails. All of that dropped today, as well as hearings going on the rest of the week. We're going to try to get into some more guests. All that stuff we're going to be breaking down for you here on TechPath this week. My name is Paul Barron. Welcome back in. All right, let's get into a couple of things here. Before we get started, I do want to thank our sponsor, and that is iTrust Capital. One of the cool things about iTrust Capital is you can, of course, invest a lot of things over there, including not only crypto, but also gold and silver into your IRAs. And they've got a brand new website, so you guys, of course, can go over there, visit, buy, sell, do all you want within the aspect of your IRA. You can also transfer your IRA in, also develop your own startup. All cool aspects of iTrust Capital. One of the things that they also are doing is giving you guys a $100 funding reward. All you have to do is click the link down below, and that will help the channel out. All right, so let's get into a few things here today, and I want to get into the first topic, and that is U.S. inflation hits its lowest level since March 2021. This is good news for the market, 4.9 to 4% between April and May. Prices rose a little bit on the month over month, but I think this is going to have a little bit of effect. But with the scenario that's playing out within the SEC versus crypto right now, we probably won't see much reaction from the crypto markets. The real question is whether or not traditional markets and institutional capital will continue to play into this if we continue to see a slide toward the FOMC this week and a pause on rates. Would love to get you guys' feedback. Make sure and smash the like button if you guys like these kind of breakdowns, and give us your input on what you think the FOMC is going to be about this week. Will we hit a pause, or could we see another rate increase? Let's get into a couple other items here, and I want to jump over to Ash Crypto. Today is going to be a big day. Obviously, the CPI released, as you saw there. Release of Hinman documents on the XRP situation. We'll go through that for you. Hearing motion to seize Binance assets. We'll talk a little bit about Binance today, and then, of course, the SEC responses to Coinbase. We won't get into all of that, but this is where this could be one of the biggest weeks in crypto in its history, with the amount of things that are happening all at one time. Another thing that I want to kind of give you guys, this is the hearing that will be going on this week. It's the future of digital assets, providing clarity for the digital asset ecosystem. And this is where it gets pretty interesting, because now you've got Jeremy Allaire in here, who is co-founder and chairman over there at Circle, which is USDC. Coy Garrison, partner and LLP over at former counsel to Commissioner Hester Pierce. This is coming from the SEC. And then, of course, Emin Gün Sirer, who is the founder and CEO of Ava Labs. We've had Ava Labs on the show many times. And then last is Prometheum here, which is one of the approved digital assets broker-dealers, which is going to be interesting to take a look at as to what their role in this whole hearing will be, but more importantly, maybe what their role in the market is going to be going forward. So a lot's happening there. Of course, CEO Jeremy Allaire now is starting to put pressure on House lawmakers to pass a stablecoin bill. And I think a lot of this is because everything is coming to a head right now with what's happening in crypto. So a lot really on the deck going forward. This is a video that we're going to play for you guys. It's a little bit long, so I'll be off screen, but I want you to listen in. This came from Stuart Alderati, who is the lead attorney over on the Ripple case. Listen to this full-length video. I think you guys are going to like it.
On June 14, 2018, then SEC Director of Corporation Finance William Hinman gave a high-profile speech where he declared that a token is not a security when it becomes, quote, sufficiently decentralized. But internal emails and documents show that senior SEC officials repeatedly warned Hinman that his speech wasn't true to the law and would greatly confuse the markets even more than they already were. Now, after more than 2 years and 7 court orders, we can finally share some of what we found in the Hinman speech documents. The SEC head of trading and markets warned Hinman that he was making up factors that, quote, go beyond the typical Howey analysis, as in not in the law, and that the speech could lead to not just confusion, but greater confusion on what is a security. Hinman ignored him.
If the network on which the token or coin is to function is sufficiently decentralized, and the purchasers no longer have a reasonable expectation that a person or a group is going to carry out essential managerial or entrepreneurial efforts, those assets might not represent an investment contract.
The same official told Hinman he should tie his speech, quote, more closely and explicitly to the Howey analysis. Hinman not only ignored him, but deliberately created factors beyond those identified by the Supreme Court in the Howey case.
I wanted to just note a few things. This list is not meant to be exhaustive, but these are things that we look at.
The SEC's own general counsel warned specifically that it's legally irrelevant if someone retains a stake in a token and is motivated to take action to increase its value, and that Hinman should delete it from the speech. And once again, Hinman ignored them and said without any legal support that it was important to ask.
Has that person or group retained a stake or other interest in the digital asset such that it would be motivated to expend efforts to cause an increase in the value of the digital asset?
Both Trading and Markets and the General Counsel also disagreed with Hinman's belief that if a network was sufficiently decentralized, information asymmetries would no longer exist, noting that a network creator would likely have more information than a retail holder, using Vitalik Buterin as an example. They warned Hinman that by creating this, quote, other category and focusing on information asymmetries, he was exposing a regulatory gap that the SEC may not have the jurisdiction to fill. Again, Hinman ignored them.
As the network becomes more truly decentralized, the ability to identify a promoter or to make the requisite, and someone that could actually make the requisite disclosures becomes in many cases difficult and perhaps much less meaningful.
On June 4th, Hinman wrote that he didn't see a, quote, need to regulate Ether as a security, and set up a call with Ethereum's co-founder Vitalik Buterin later that week to, quote, confirm our understanding. On June 11th, the SEC's own general counsel advised against including any direct statement about Ether in the speech because it would be difficult for the SEC to, quote, take a different position on Ether in the future. The next day, Trading and Markets wrote that the statements about Ether were, quote, likely to create more confusion. Hinman ignored all of them and decided to make headlines, picking winners and losers instead.
Moreover, putting aside the fundraising that accompanied the creation of Ether, based on my understanding of the present state of Ether, the Ethereum network, its decentralized structure, we believe current offers and sales of Ether are not securities transactions.
The emails show that Hinman knew he wasn't following the law. He knew he was making things up. And he knew that his speech would result in greater confusion in an already confused market. But Hinman went ahead with the speech anyway. And the SEC, despite knowing all this, touted the speech repeatedly. The SEC chairman himself pointed market participants to the speech.
Bill Hinman recently outlined the approach we take to evaluate whether a digital asset is a security, and I encourage you to take a look at Bill's speech, which is available on our website.
The SEC knew the speech didn't follow the law. The SEC knew the speech would create greater confusion, and the SEC knew Hinman was making things up. So why is the Hinman speech still on the SEC's website? Why was it ever allowed to be given at all? And why has the SEC pushed a policy of regulation by enforcement, falsely insisting the rules are clear?
All right, so a lot happening with the Hinman emails, obviously with the speech. Many people already kind of have seen that and heard enough about that, but really what it boils down to is what is in the emails, and that's the bigger question. I think what this really boils down to is two scenarios. One, of course, is that Hinman was in essence picking winners and yet still kind of skirting outside what the law was truly meant to do. And this is the challenge that Ripple is really facing. If you look at this tweet here from Digital Asset Investor, it was kind of important to remember that the Hinman docs today, read them. We'll show you a little bit of that. Hinman and the SEC lied in court over the year, saying the speech was Hinman's personal opinion only, which it sounded obviously now that this was his assessment. And then they pieced together a video. This is what you just saw. A little bit here from Gasparino on Judge Netburn has ruled in Ripple's request for privileged SEC docs determining the XRP as security. Mixed ruling for Ripple, but judge says drafts of former SEC Bill Hinman's now famous speech on what constitutes a security. So there's some things still yet breaking out. And when you look at the amount of offload that happened when they released these documents, I have a feeling we're going to see more and more material. This is just the example of the Dropbox that contains all of the documentation that was released today. A lot of redactions, of course, but in short, there's a lot here in terms of all the documents that were pulled up. So kudos to the Ripple team, of course, breaking down a lot of this. And of course, many of this is going to go through a fine-tooth comb to really see if there's additional materials in here that could help Ripple, but also help crypto's position overall. So a lot happening for sure. Here was Eleanor Terrett, who is Fox Crypto's reporter. Biggest takeaway from the Hinman emails seems the SEC officials weighed in on the speech, believed the goal was to provide market guidance, and tried to write it in a way that would convey that. Thus, the Ripple case and the SEC lawyers' argument that the speech was solely Hinman's opinion and not intended for market guidance would now be undermined. So this was a big factor here on just his opinion versus actual market guidance. Those are obviously two polar opposites when it comes to how this plays out. Further into this of course gets into Ripple now calling for an investigation into the former SEC official after the document release. Was there more activities going on? You saw the personal call to Vitalik, along with other aspects of being able to declassify, in essence, Ethereum as a security. So many things that are starting to portray into this. Remember, though, Gensler has still not yet completely released ETH as a non-security either. So we're still seeing a lot of balance in the SEC, which does start to portray a new position for the SEC versus what Hinman was kind of positioning for at the time of his last speech that he got into. And remember, Gensler is also kind of in this as well. He's not complicit. Listen to what he said back in 2018. This is a clip from there. Let me play this for you guys.
Over 70% of the crypto market is Bitcoin, Ether, Litecoin, Bitcoin Cash. Why did I name those four? They're not securities. Over 70% of the crypto market is Bitcoin.
All right, so as you see, Bitcoin, Litecoin, ETH, and Bitcoin Cash, not securities. This was something that came in from Gensler in 2018. Again, this is back. Remember, he somewhat was a pro position in crypto in general. So something has changed in the scenario since 2018 to now. What is going on? There's a lot of speculation as to maybe him starting to pad his CV, looking for his next position, knowing what his position here with the SEC, most likely going to be stepping down or getting fired. We'll see. And this is kind of interesting coming from the SEC's website. We've seen this story before. This, of course, was talking about the Piper Sandler Global Exchange, the FinTech conference. A couple of things I want to highlight right here. Let me zoom in on that for you guys so you can see it. In the Howey decision, court said the definition of the investment contract embodies a flexible rather than a static principle, one that is capable of adaptation to meet the countless and variable schemes devised by those who seek the use of money on others' promises of profits. And as I've said numerous times, the vastly majority of crypto tokens meet the investment contract test. Not likely the message isn't the same thing as not receiving it. So again, this goes exactly opposite of what he was saying and is been saying in terms of the structure of what the SEC is trying to do around regulating crypto assets. So it's still a very confusing situation. Obviously, the situation with XRP is going to be the one that is very critical in playing out. We've seen XRP continue to get a little bit of a bump here recently. I wanted to jump over also to this tweet from Mark Cuban because he also reiterates a little bit of this. Here's the SEC calling the stock loan industry opaque and requiring transparency. Note, they are not calling stock loans a security as they're trying to do with the loaning of crypto assets, nor are they suing the stock loan departments of broker banks. They're going essentially the alternative way, which is getting into a scenario which is exactly opposite of what they've been doing in the crypto market. So very, very interesting of how they're picking sides around this. So I think this is the SEC applying certain rules for certain people. And this is the one thing that I think everybody has really said, all right, this is overreach. And obviously we've seen a lot of scenarios play out in this case. Here was, of course, an interesting point right here. Dear Judge Torres, XRP a virtual currency. This is coming from Stuart Alderete. Let me play this clip for you guys.
What Gary Gensler says, or what the SEC says, I don't want to make this personalized to Gary Gensler, but what the institution is saying is that if you buy an asset and you hope that asset rises in value so you can trade it in the secondary market, that falls under my jurisdiction. And that's not the case, because if it were the case, if I were to sell you a bar of gold, or if I sell you bucket of soybeans, or if I were to sell you an Andy Warhol lithograph, and then I were to go out and to promote Andy Warhol lithographs under the SEC's theory, if you can sell that Andy Warhol lithograph, or you hope to sell it at a higher price than I sold it to you, that's a security. It's not. What you need is an investment contract, which means you need a contract for an investment. A right, title, or interest in the entity that is selling you the asset. There has to be some post-sale obligation. After I sell you that Andy Warhol lithograph, I have to be contractually obligated to you or make some promise to you that I'm going to do something on your behalf that you can hold me accountable for if I don't do it. That is a security, and most cryptos don't fall under that definition. That's an asset, and it's probably an asset that trades in a spot secondary market, and that's more of a traditional world of commodities that falls under the CFTC's jurisdiction.
All right, so he hits it on the head. I think, everybody knows that's what we've been talking about for months, years, it feels like, when it comes to these kind of scenarios. And if you think about it, Stuart's explanation there of art, his explanation of other assets that are sold in secondary markets. I mean, you think about the luxury goods markets, the watches industry, art, obviously, as a whole. You could even go into collectibles on eBay. There's so many things that when people are buying these things, they are expecting to make a profit. The difference is that investment contract. So I think this continues to pour into the case of crypto as a positive thing. I think at the end of the day, guys, we are going to win this out. The situation is trying to figure out what is it that the SEC is really up to, knowing that we've got all of these kind of scenarios playing out in courts and most likely going to be in some sort of laws that come out of Congress. What is it that the SEC is really trying to achieve? And I think that's the bigger question going forward. So here was Warren Davidson, SEC Stabilization Act explain, and it's pretty simple. Let me kind of just highlight this item for you right here. Old structure, Gensler at the top, a lot of commissioners there. New structure, commissioners from both parties, and Gensler essentially serving that. And this is kind of the top-down approach toward management, where you have senior management working with the teams around them to come to a solution. I think this is an interesting structure and would be a lot different in terms of how we would see potential ruling as well as enforcement. That's the bigger issue right here, because now we're dealing with enforcement, not legislation going forward. So big deal here. Binance, speaking of legislation and enforcement, kind of on the alternate side of things, BinanceUS sees a 78% decline in market depth following the SEC lawsuit. This is a big deal for Binance. It pretty much shuts down the BinanceUS exchange in a sense that it's making any money. This will put a lot of pressure on Binance from a global perspective, still as the number one trading house out there when it comes to global crypto. But listen, guys, when you take out the United States, no matter, and I say this all the time, crypto is a global business, but it's like doing oil without the United States. Yes, you need the consumption of the United States to really have a vibrant community and a vibrant trading ecosystem. This will put a major setback on crypto if the United States does not get this in place. I think it's just a matter of time, but I hear a lot of people talking about, don't worry if the US isn't in it, crypto's gonna live and be fine without it. That is not the case. Crypto will be 10 years set back if the US does not get this underway. All right, further into this, let me kind of go here. Binance, of course, has responded to the SEC's government complaint. An industry source told Friday this is exactly what the SEC wanted. Panic sets in with Gary Gensler without any evidence of wrongdoing. This will evaporate the second largest crypto exchange and wipe away $4.5 billion in value. And this is a big deal. To me, when you think about going after the head of the snake, this is it. Binance having this kind of head-to-head. Now, Binance has really started to lawyer up here, and whether or not they can go one-to-one with the SEC is the question mark here, and whether or not this starts to affect anything within the global exchange, Binance as a whole. So a lot of that really playing into this. Here's a clip that I want to play to you guys quickly from Cramer. I think you guys are going to like this one.
Solana, created by Solana Labs. ADA, native token of Cardano. Matic, native token of Polygon. FIL, the native crypto asset of the Filicon network. Atom, the native crypto asset of the Cosmos Hub. Sand, created on the Sand Ethereum blockchain. Mana, minted by Decentraland. Algo, the native token of the Algorand blockchain. Axie Infinity Shards, another Ethereum token. Cody, a native of the Cody blockchain. These are all poppycock. If you're in them, you're a fool. You're just a fool. After reading this brief, I think that all these coins are more or less counterfeit. Why bother to mention them? Because unlike the banks, these crypto assets all seem to be scams, and I want you out of them. Many of you traffic in them every day. You should. You're wrong. Coinbase is a little different. No outright fraud, just no registration as broker-dealer, which the SEC says has led to ill-gotten gains. Ill-gotten gains, that's bad too. I mean, you're never going to get any credence on Mad Money when you do this stuff to our viewers. I am after you, and I'm not done. I'm getting started.
All right, so as you can see with Cramer, obviously this is more of a strategy I think that they've been trying to do, and that is to get you, convince you to basically break away from crypto, get into the other scams that are out there, whether you think about Wall Street bets or other aspects of the traditional finance system. The biggest thing here, I think, with Cramer is that they don't even realize what these projects do. They have no research, there's no basis for it, but yet at the same time, they're out there throwing them under the bus. So I think the biggest scenario here is that the millennials, Gen X investors, they already understand, they get the joke. I think they themselves have started to separate from traditional finance. Speaking of that, let's talk a little bit about Solana. Solana's doing some things right now with a fork, potentially because of the SEC and obviously the price tanking here recently within the last week with these delistings. This may be a good thing for Solana, I think, overall. The scenario plays out, again, where a lot of tokens are probably going to reassess their strategy going forward, whether it's as a DAO or other foundations that are trying to build in a way to navigate around the potential roadblocks being put in front of them by the SEC. We'll see how this one plays out. A couple of things that they're talking about, the community itself and developers now are opposing the SEC through this action. It would do a couple of things. It's going to loosen up some of the scenarios that have been playing out within Solana, including a lot of the locked up tokens that are over at Alameda, and how this may actually play in favor. So it could be a good thing. We'll see. The bad thing about Solana is really what they did in trying to actually go out and kind of position against the SEC. And that is right here is and guys, don't get me wrong. I'm a big fan of Solana. I love what they're doing, but I mean, there needs to be more structure in how you're going head to head with the SEC. This needs to be real in the sense of, one, how you address it as a foundation. Number two, you cannot kowtow. And number three, you've got to come up with a strategy that is multi-layered. It can't come out with one tweet and you're done. This is a multi-layered strategy. Solana needs a full social media campaign, videos. Look at what Ripple is doing. Look at what we're seeing with other strategies out there from other blockchains. This is one message I want to get to all blockchain foundations that are out there right now. If you're not actively building together a full, let's just call it, propaganda campaign to be able to inform what's happening in the SEC, because we are getting ready to see a massive onslaught. This is one thing I think we're coming together, may be a good time for some of these project leads to really start repositioning this overall. Another one right here, First Mover Americas. This is eToro now delisting the 4 SEC targeted tokens. So now eToro in the game here. And remember, eToro as well as Robinhood also delisting some of these. eToro, of course, is delisting Algo, Mana, Matic, and Dash. So a couple of things here with this is how many more exchanges that are trading within it. Will we see stuff happening within Gemini, maybe KuCoin, other aspects around that we could see more exchanges start to pull away from these top level tokens. Gets back to the point I just made, is that we need a lot of this come together. And I think this needs to be a position that starts to put it in play to, one, educate and reposition from a strategic standpoint from these tokens. Speaking of that, look at what Polygon is doing strategically. Now, whether you like this or not, vision of Polygon is simple. Build the value layer of the internet. The internet allows anyone to create, exchange information. Enter Polygon 2.0, a blueprint to build the ultimate value layer. So they are going to essentially pull a fast one on rescaling Polygon into a 2.0 version. Now, why are they doing that? Most likely they see some problems with the SEC. Obviously, we've already seen it with the delisting on Robinhood and now eToro. The other aspect of this could be that maybe this is a step in the right direction from a strategic standpoint to, one, be defensive as an offensive move, which I think might be a good thing. But overall, I think it's still a situation where the entire crypto market is going to be doing a lot of very intriguing things. The key here is making sure that they are making it very well known in the campaigns of social media, reaching the millennials, the investors out there, because I think this is going to be the biggest one. Speaking of that, of course, you got to think about what Charles Hoskinson has been doing. Now, I will say this. Charles has been one of the most outspoken, I would say, the most outspoken guy in blockchain when it comes to other chains and him always kind of wanting to one-up them. It's a little different now. And one of the things he's doing right here within this article, facts might be inconvenient to the SEC, but the facts are facts. Hoskinson tweeted, pointing out that ADA was sold in the U.S. and no ADA was sold in the U.S. and that the original financing was done in Japan with vouchers that were later converted into ADA in an airdrop in 2017. So he was doing the right things. And then if you look at his tweets in the past, he's basically come in and said, hey, wait a minute, we are interested in doing something else. Let me kind of zoom over to this. Look at this. XRP community. Let's have peace. This to me is the first step in the right direction for defense mechanisms to be put in place by all of these projects. All of these projects, as I said, should be really ramping this up as a goal to be able to go out and defeat this. And it's going to come in the way of propaganda. And when I say propaganda, facts, information that is getting out there in a way that starts to activate people and get people involved in this, because millennials are the ones that are targeted here. Do not mistake that. This is going after the millennial investor who is in their earning years and in their prime investing years. Reason? They want to control you. They want to put you into their stocks so they can run their Ponzi schemes on you. That's what this is all about. So another one issue here is the US SEC out of bounds in dragging DeFi into a proposed exchange rule. This is the industry that's kind of saying this. Basically what this means is DeFi could be in a situation where they too are getting expanded on around the SEC's power. So the SEC essentially saying, well, wait a minute, we think it's greater than just crypto exchanges in general. Further in the article here, I just wanted to highlight one other item here, a couple of things. Proposal would operate as a blanket de facto banishment of DeFi from the United States. The DeFi Education Fund, a lobbying group, wrote this in the letter. And the actions, in the words of the commission, the agency personnel have created great confusion. So again, this might be a scenario where it could be IP blocking, all sorts of things that could go on within that. Further in the article, there's some other. It appears that after suing Coinbase for failing to do the impossible, registering as a securities exchange when it is incapable of doing so, the commission now intends to force DEXs into the same Hobson's choice. The newfound definition of exchange is so far-reaching that it would factually encompass entities that are plainly nothing like exchanges. So swaps, DEXs, etc. All of this just is a massive overreach by the SEC. This, I think, is one of the ones that is the most bombastic of where this is going to go in the future. All right, a couple of things right here. This was Tyler Winklevoss coming in saying, hey, listen, Roe cost the Republicans the midterms, for sure. Blue Wave came in and kicked the Republicans' bottom on that one. And now Senator Warren and Gary Gensler's war on crypto will cost the Dems in the 2024. I believe this is a scenario that will take place. If you've been following me on Twitter, at Paul Barron, I actually tweeted about this I think it was a couple of weeks ago, that this essentially is the underlying effort when you look at the activity of how Senator Warren and Gensler are associated. Is there something there? I know there's a lot of speculation, and if you look at kind of the crypto Twitter out there, people are pointing at this. Washington and lawmakers move in mysterious ways, and it's the bedfellows they make for long term. That's why we get in such an incestuous aspect of how lawmakers just continuously are repopulating the swamp there in DC. This is no different going forward. I think Tyler is exactly right. Here was his brother Cameron basically saying crypto's already won the hearts and minds of millennials and Gen Z. They don't debate the merits of crypto. They debate where and what to build next. The millions have put their life savings into crypto. They won't forget the value destruction Warren and Gensler has caused. And this is, to me, is the bigger point. Gensler is after the millennials. Whether you want to wreck the millennials and repurpose them to go into investing in traditional finance, or you're just in overreach trying to protect CBDCs and the potential of the banking and financial system that is already in place, either structure does one thing, and it defeats the opportunity here for great growth in an emerging investor class, being the millennials. So I think this is the one I would be most worried about. Further in this tweet right here, just as an example, this came in from Gary Gensler. You know, he's pretty active out there on social. He kind of likes to do some pretty trickery things. But what he did was, when you go click this section, Schools Out, Investing for Your Future, this is so good. So here's what he wants you to do. I want you to invest in, it pays to start early. Let's go also take a compound interest, individual retirements accounts, do that. Then some free money, okay? All right. Research all investments and avoid too good to be true opportunities. Well, that could easily fall into many of the tech stocks out there. It could fall into things around Wall Street bets. It could fall into crypto. Yeah, because those are projects that could become like Amazon did when it was a too good to be true, like Microsoft, too good to be true, like Uber, too good to be true. All of these, when you catch them at the right place, are always too good to be true. That's what an investment is. That's exactly the risk and reward opportunity that is facing millennials today. So good stuff out there. Here's a good one for you. Don't forget, you can actually text the president. You can tweet him too, but if you haven't already, text him at that number, and you can tell him what's front of mind for you and your family. Is it just, hashtag fire Gary Gensler? I think that might be a good enough text that he might get the picture on this one. This is a big deal, guys. We are in for a big week. Don't forget, we're going to be doing the full-on hearings tomorrow. I'll have Meta Lawman coming on this week. We've got Evan coming in studio. We'll have a ton of coverage for you guys around not only the SEC, what's happening in the Ripple case, what's happening on these scenarios around the hearings themselves, and more importantly, where does this play out into the future? The last tweet right here, this is Senator Bill Hagerty. We showed this a little bit. Make no mistake, the SEC's attempt to undermine the digital asset industry is a deliberate move by Gary Gensler. It has made it clear that he wants to see private cryptocurrencies fail to make way for a CBDC. I don't know if that's necessarily the case. It could be, but at the end of the day, I think Circle is the one that ends up losing big time. If you look at the Circle market cap versus Tether and the growth over the last year, big difference between these two. Tether, a global stablecoin, and I think with USDC, we're continuing to see some pressure here. Do they get a chance to maybe pull in and be part of this? I don't know, but I know now Jeremy Allaire is going to be addressing Congress and doing the exact same thing that a lot of these other projects are doing as well, and that is getting their case on the table in front of our lawmakers. All right, guys, we're going to be coming to you all week. Don't forget, if you're not already in our Diamond Circle, get in now. It is the place for additional content. We do another podcast over there. We also have additional information that I do. Sometimes I'll do video updates. I'll do short casts out there that we put into our emails, additional audio pieces. So catch all that good stuff over there. And of course, if you want to reach me, it's out there on Twitter @Paul Barron. We'll catch you next time right here on TechPat.